Then we just have to post the links and we're ready to go. Here we go. Let's post that. Let's post that. And we're as live can be. There we go. Now, all we got to do is share my link, my screen, and I think we're good to go. There we go. All right, perfect. Dave, good morning. David, good morning. Robert, Dr. Serena, Timothy. Hope everybody's doing well this morning. Hope everybody had a good day and didn't lose too much money yesterday in the market. Flying Ronan is in the house. Sergey is in the house. Let me give you guys some links. Infinitely, CJ, Ricky. All right, Tom is in the house. Awesome is in the house. Remember, folks, at 1 p.m., I'm going to be going through the most shocking second quarter market outlook report and my big predictions on stocks, oil, bonds, and even cryptos. You don't want to miss it. Brian, good morning. Welcome. Hope everybody is doing well today. Hope you guys are happy and healthy. I usually start when we have about 100 people on. It should be maybe another 15, 20 seconds, or maybe even less than that. Gary, Roddy, good morning. Thank you for that email, Roddy. I'm glad you made out like a bandit on that stock yesterday. We, believe it or not, we took a profit, a pretty good profit actually, on Disney yesterday while the market was down 400 points. Oh, good, Tony. Good to see that. Yeah, well, we hopefully you'll get into some of those trades. All right. I'm doing well. All right, we got 85 people here. Let's see. I think people are still playing hooky from last week, but let's see if we can get this thing going here. All right, I'm going to go ahead and start in about 10 seconds. Thomas is in the house. All right, there we go. 98. Let's now start. That's close enough for me. All right, so let's begin. What's going on the table? Hey, David. Yeah, Disney still looks nice. Remember, every trade I pick, guys, starts out as a swing trade. No matter if we're trading the stock for 9 minutes or for 3 days or 5 days, I never look at a stock unless it's a swing trade. Oh, you're welcome, Richard. The bargain hunter gang. Good. All right, I think it's a good time to begin. Folks, today is Wednesday. Before we begin, just a few things. Keep your eye on chip stocks today because Intel got downgraded. And keep your eye on bank stocks because Ally Financial got downgraded. We will talk about that. As far as the broad market, we're seeing some downside on Nasdaq right now, but the Dow is pretty flat. Not much there. I'm assuming the downside on the QQQ is due to Intel. Let's talk about data we got on the table today. Hey, Arturo, Penny, how are you? Yeah, RTX, LMT, USO, yeah, they were all strong. That's right. Jody, good morning. Believe it or not, but I give you guys really good stocks. We'll talk about Tesla as well, Adam. If you can remind me like 10 minutes, I want to talk about Tesla actually towards the end. I'm not happy about Tesla. Tesla got downgraded again. They didn't have good deliveries, bad stuff. But first, before we get into individual stocks, let's talk about the broad picture. So we got OPEC meeting today. We got Bowman speaking today. We got the PMI composite. We got ISM service index. This is going to be the big report today, okay? The ADP report. Why is this a big report? Because it reflects upon the employment situation on Friday. Now, sometimes this report can be really, really strong, and it can really create a catalyst for the market. And sometimes it won't do anything. And the question now is, how accurate is it? It's been really off a lot lately. It's been totally off. I would say the accuracy of this report over the last maybe 15 sessions has been about 50%, maybe 55%. So I'm not really seeing. I don't think it's worth paying much attention to it in terms of what it says, but I think it's important we pay attention to it in terms of the impact it has on the market, because we're not going to know if this report is accurate or not till Friday, and that puts us in the wind for 48 hours. We got Jerome Powell speaking. We got Barr speaking. We got Kugler speaking. They're all going to be telling that stupid kid, that not stupid, but a dense kid, how he's not getting, hey, Angie, how are you? How he's not getting that damn bike. That's what they're going to be saying. That you may get it, you may not get it, but for now, you're not getting it. And the odds are good you'll get it by the end of the year, but we'll talk about it later. That's kind of where they're talking to him. And good, Richard. And basically the kid still thinks he's getting that bike sooner than later. The big report is going to be Friday. That's going to be employment report, and that's going to be telling us whether hourly earnings and the unemployment report. These are the two major factors: the unemployment rate and average hourly earnings, especially year over year. I'd like to see Powell explain this one away, but we'll see if we get there. But again, you have a lot of interesting Fed data on the table. Speaking of Fed data, let's see here. Why does it erase all of my goodies every time? It updates and it erases all of the goodies that I spent writing here, but it doesn't matter. If you look at the bond market, and this is something I want to bring up to your attention. So yesterday, something happened. The bond market yesterday crapped out, went down here yesterday. Well, remember what I said. I said that we're in a descending triangle. The odds are we're going to break down, but I don't think we're ready yet. I think the bond market is going to start coming back up here and sitting in this area and then finally break down. I think the timing isn't there yet. I don't think we have any degree of certainty. Look, think about this. There's a 62% chance based on the market that the Fed is going to lower rates in June. If the market thought that the Fed was going to lower rates in June, why would bonds increase yield yesterday? So you see, there's a huge disconnect between what the market is doing and what the Fed is telling us. Huge disconnect. This means bonds are ready to go higher. Interest rates are ready to go higher. Bonds lower means higher rates. Meanwhile, so it's kind of like, hey, you're going to get your bike. You're going to get your bike. There's no way in hell he's getting that bike. Hey, you're going to get that bike. You're going to get that bike. There's no way in hell you're going to get that bike. Do you guys understand the situation we're in right now? So and this is one of the reasons why stocks took a dump yesterday. So the question now is the market right or is Fed right? Because they're completely contradicting each other. According to the bond market, interest rates are going higher. Yield went up yesterday, not down. So how is it possible for interest rates to start going higher as the Fed is talking about interest rates going lower? Yes, Richard, it will. It will. So again, there's a big disconnect in the market right now. But here's what I'm going to tell you about that. The bond market has been more wrong this year than I've ever seen it in history. Seriously, the timing on the bond market has not been good. The bond market has been really inefficient in terms of interpreting data. Therefore, I don't think this is very meaningful because most of what we've seen has been very late or too early. So I believe in this case that the sentiment towards higher rates is going to change and we're going to come back here. And later in the year, as we get closer to the summer months, to the point where the Fed can't say anymore, to the point where the Fed will say, look, there's no way in hell you're getting that bike in June, okay? That's when I think we're ready to go. I think that sentiment is still at least 50-50 according to according to the Fed, according to the bond market, it's 62%. So I'm expecting a breakdown in the bond market when this baby gets to 40%, 30%. If there's a 62% chance that we're going lower in rates, then why the hell is the long bond breaking down? Right? Do you guys understand what I'm saying? So there's a disconnect. There's a disconnect between not a disconnect in price. This looks pretty good, but based on what I'm seeing and hearing from the Fed, and based on what I'm seeing and hearing here, I think this is a little too premature. So I think the bond market's going to start coming back here, and this is going to be what we call a trap, a big trap. Excuse me. Excuse me. I must have gotten cat hair in my nose. Anyways, so do I believe that bonds are ready to break down? No, I don't. And if the Fed is going to start lowering rates, then bonds should be going up, not down. So I think this is a trapdoor, and I think this is going to correct itself over the next 48 hours. Now, if I'm wrong, and folks, here's the thing: if I'm wrong, and it's possible, then the Fed is going to start changing their tune and start coming out and saying, "Hey, we got to have a little talk about our timing here." Okay, so the only way I see this continuing is if we start seeing some strong evidence from the Fed that they're changing their tune. And so far, I haven't seen that at all. So far, they're still saying exactly what they've been saying. We'll see what happens. I want them to start saying, hey, we're probably going to have to change our timeline. That's when the bond market starts going down. But so far, I haven't seen that. And the fact that it's still at a 62%, why am I spending so much time on this? Because if this keeps going down, your NASDAQ stocks are gone. Do you want me to talk about it some more? Or do you want me to talk about a different topic? I thought so. So everybody wants to know if the NASDAQ party's over. Well, if the bonds drop down, the NASDAQ party's over. But I don't think they're ready to drop down. Good morning, Paro. So again, I think we're going to start seeing a little more upside, and I think the bond market is going to come around here and then finally start going down when the Fed starts confirming and when this number starts going to the 40th percentile. I don't think we're there yet. Do you guys understand why I'm saying what I'm saying and why I'm spending so much time with it and why it's so important? Because it's all relevant to the big picture. Markets aren't isolated on their own. So when you see the bond market dropping and you see this at 62%, you got to ask yourself, what the hell how can there be a 62% chance based on the market that the bonds are going to drop? Meanwhile, yield is going higher. Yes, there's a 62% we're going to lower rates in less than April, May, June, in less than 3 months. But meanwhile, let's go raise them. Does that make any sense? No. So, okay, just want to make sure we're all on the same page. So this is what. So I think the bond market's going to correct, and it's going to give tech stocks and other stocks a little bit of a lift before going lower. I don't think we're ready to drop precipitously yet. I don't think we're anywhere near there. And I think if we were, we wouldn't see a breakdown yesterday intraday. This is the intraday chart. And then all day afterwards, what does the bond market do? Goes up. Sounds very fishy. Again, I'm trying to create a picture for you guys, a movie, so you guys can continue watching even when I'm not around. So you guys understand what everything means and the significance. And then on Telegram channel, I kind of go through it all day long. But again, I'm very consistent and there's no Mickey Mouse BS here. So again, the bond market broke down, went higher. Now we're back in that range, probably because there's weakness in Intel and we have data. But again, I believe we're going to go higher here. Let's now talk about levels, okay? Let's talk about key levels. I know you guys like when I talk about key levels. And I think it's so important. You know how I drew these lines? And I think it's so important to know, are we here? Are we here? Are we here? So look at what happened yesterday, okay? And again, you know, I drew these weeks ago. I just keep, right, Robert, I want my bike now. I think so too, CJ, but I'm getting to the point where I believe they're not going to lower rates at all this year. And if they are, it'll be for political reasons, like most of you guys say. Okay, so what are our lines that I drew weeks ago telling us here? So we're looking at 60-minute bars at a month. This is 1 month. So look at what happened yesterday. This is the importance of these lines. Like a month ago. We went in here. We went into the third level. We went into the doghouse for a little bit. But what happened? We bounced off. Right? Let me erase extended hours. Now, it's nicer with extended hours. This breaks it down day by day. This looks at it like all days are mixed together. I'd rather look at it as all days mixed together. So to me, it looks like we tried to come in here into the third quadrant on the SPY, and then we bounced back. So now we're well into the second quadrant. And what do I always say? Now, remember what I said yesterday morning? Once we entered this range, like we did yesterday. Hold on. So what happened yesterday after we entered this range right here? We traversed all the way down. When we enter a new range, we tend to traverse all the way across it. That's a rule I want you guys to remember. So here's the level where we were at yesterday. We huffed, we puffed. Wouldn't it be useful to have this yesterday when the market was crapping out and seeing it coming back up here? Here, here, look at that. This is the 5-day view. That would be very useful. Well, guess what? I was looking at it yesterday and sending it to you guys on the Telegram channel. So now we're back in here. Now the question is, are we going to traverse and come back up here? I do think that's going to happen today and tomorrow or tomorrow. Could have severe news driven by drop. Very true, Adam. Very true. Although they try to keep the news on large caps more after market hours. So now I believe that we're well in this area. We're either going to break the 417.59. And by the way, I didn't micro pick these levels. So give them like 10, 15 ticks each way. This is not like down to a science. That's why I say 517, somewhere right here, 517.60-ish level, 50-ish level. We're not trying to pick tops and bottoms here. We're just kind of looking at levels. And then this level. So now that we're well into this level, and look, overnight, look at what happened overnight. Look at real time. We couldn't break this level either. We tried. We tried here, but we couldn't do it. We tried again here, but we're not broke. We haven't broken down yet. So now we're in this level. The odds are we're going to traverse and go up to the 520 level, or we're going to come right back down to the 517. But keep your eye on this level, the level between 521 and 517-ish, okay? And again, please take these levels with a grain of salt. I didn't microscopically adjust them. I just, rough balled them. Now let's look at the QQQ and get some data from there. And I think it's very important to look at the market with these levels because you can really see where are we, what spot are we in. All right, this is the QQQ. What happened to the QQQ? I'm more interested right now in the QQQ because we got all those tech components. Well, we huffed, we puffed, we went into this level yesterday, and look at what happened. We went back above it. And even this morning, we went here, but we haven't broken it yet. So to me, I still feel we're in this area right here between 442.40 and say 440, okay? So I think we're going to stay in this level or maybe even break the 442 level and go all the way up to the 443 level, or break this level right here, the 440 level, and get back into the doghouse. Now, if we get into this doghouse right here, look at how big this area here. There's a lot of room to go down. And what do I always say? Once we enter a level, we tend to traverse that level, or we poke out right away, like we've been poking out here or right here. They don't tend to stay in the level unless they stay. Okay, unless they stay. So again, we're right here right now. We're in this level. Keep your eye. Are we going to stay in this level? Are we going to go up here? Are we going to stay down here? Let's now look at the Dow. The Dow, same thing. The Dow got weaker yesterday. Why? Because of all those damn insurance stocks. Okay, the insurance stocks yesterday really put a hamper on blue chips. Blue chips were really doing well till we got the news about that 2025 Medicare health. So this is a doghouse right here, but they're still pretty strong, and they're only in the second tier, right? They're only here in this level right here. So let me just expand this a little bit here. All right. So is the Dow going to stay in this level between 39,240 and 39,000, or is the Dow going to go above and hit 39,300? If we hit 39,300-ish, again, this is not an exact science. There's a good chance we're going to start traversing and heading towards the high again, or we're going to just hang around here, or we're going to break this level. Please keep an eye on this. Hey, Rebecca, how are you? Please keep an eye on it. In terms of, let's just see what the impact of the report. No impact really. Maybe even a little positive. Yeah, we've had a positive impact, not a negative impact. I'm not that bearish today. I was pretty bearish on Monday and not really bear. I wasn't really bearish on Monday. I was bearish yesterday, uh, towards the end of the day, and then we started getting some upside, and I'm pretty neutral right now. So I think the market is going to start looking for a bottom, and I also like how we bounced off of this level and went up towards the end of the day on the QQQ right here. Here, look. See how we went down and then boom, this is the end of the day yesterday right here. This is all overnight in today's data right here. So look at how we rallied on tech yesterday. Look at the SPY. Look, we went down here, said hello, and then said, no, we don't want to go down to this level. We want to stay up here. And the Dow, let's look if the Dow did the same thing or if the Dow fizzled out. I'm not big on the Dow, honestly. I'm more on the S&P kind of guy and Nasdaq, but because the Dow only has 30 stocks, but you know, it's good. It's a good guide for blue chips. Dow went to this level, but couldn't break back up. Oops, right there. Couldn't break back up. So we're still in this level. So the Nasdaq and blue chips that are non-Dow specific are looking a lot better today, which tells me that the market may start coming back up because that's a positive sign. Those are more like consumer stocks, things like that. Volatility is up 2%. Yesterday, volatility rallied, and now it's coming right back down. And yesterday, look at what happened yesterday. It rallied, came down, gapped up this morning, coming down. So I don't think volatility, and I didn't say that volatility was going to really spike. Matter of fact, I told you that the day before yesterday, I told you on this broadcast that notice I'm just connecting this level. Look at the high here. Hit this level yesterday and then coming back down. What I told you yesterday or the day before, I don't remember exactly when, but I said unless we go above 15, like really break out, it's a non-burger. And to me, it looks like we're going to converse back down. I don't feel the market is going to be, I don't see a major correction this week or anytime soon. Okay. I'm seeing more sideways consolidation, looking for balance, looking for directional bias, but I'm not seeing any major breakdowns. I mean, we'll see how Friday goes, but till Friday, I don't think there's anything major unless Powell and his cronies literally come and tell the kid, there's no way in hell you're getting that bike. And I don't think they're going to do that. Okay. So you saw the levels, you saw the technicals. Let's now talk about fundamentals and try to put everything together. And I'll highlight it to you in real time for the second time today. So uncertainty over Fed plans to cut interest rates, stifled market sentiment, focuses on Jerome Powell talking at ADP, which already came out. It was a rough day for the market yesterday. The S&P, Dow, and Nasdaq all hit a 1.5-week low. Tesla plunged. I'll talk about Tesla and Google in just a second. Tesla dropped again. They had really bad deliveries. Don't say I didn't warn you, but the stock is not doing really, really well. Jolt's report came in at 8.756, slightly below expectations, but not really that bad, really. And factory orders rose, which offset the lower job openings. We have a little bit of uncertainty right now, which is when the market is only reacting this way. Roger, only 9, like some folks not doing their job. I'm okay, Art. I'm okay about that. Here, this is my beef right here. If there's a 62% chance that the Fed is going to drop rates in less than 90 days, I think the bond market would not be breaking down. So there's a clear disconnect between this and what's happening in the bond market. A lot of Fed speakers are going to be speaking today, so we have to be extra cautious, although I don't think they're going to tell us anything new. We've got ISM non-manufacturers PMI. We got global PMI. We got global service PMI. Crude oil inventories, very important. Crude oil is going crazy. I'm expecting it to consolidate for a few days and then go higher. Europe, this is important. Europe is up a little bit. They're waiting to hear what Powell says. Bank stocks gained yesterday. Real estate and mining underperformed. Now, this was interesting. Preliminary data shows the Eurozone and annual inflation unexpectedly eased. That's really good for Germany, guys. Really good, and that may give us a little tailwind. China. This is actually really good too. Indicated expansion in the service pace. Loss in tech stocks didn't do us any favors, but a private sector showed on Wednesday that their service activity accelerated in March as new business expanded at the fastest rate in 3 months. This is very bullish for us in the U.S. China impacts U.S. market. Japan didn't really do much today, closed below the flat line, disappointing sales. Retailers really looking at Wall Street right now. Now, this is one of the reasons why we may see a little downside in chip stocks today, although I looked at AMD and NVIDIA and I saw that it was really limited to Intel because it was very specific to Intel. They said its foundry business recorded operations of $7 billion, of wider loss than $5 billion. This is not good for Intel, and frankly, Intel has not been on my good stock list for a while. Another stock you have to take a peek at today is shipping stocks. UPS gained a little bit. They were upgraded, and Ally Bank fell. Typically, when bank stocks get downgraded, they tend to impact other regional bank stocks. So keep your eye on bank stocks today. Keep your eye on chip stocks today, and keep your eye on shipping stocks today as well. All right, fragmentation. I'll be pretty quick on this. I don't want to waste your time. I don't think I waste anybody's time, but oh, by the way, just very quickly here, where are you? Here we go. The number of stocks making 90-day breakouts is at 137. Oh, I'll talk about that in a minute, guys. Thank you for reminding me, Cam. I appreciate that. Very nice of you. I get more emails now about Cam than I do about Trading Pit. People are loving him, which is a great thing. All right, we got 137 stocks making 90-day highs, 55 stocks making 90-day low. My short list today is about as long as my long list. There's absolutely there's no reversal in any sector. The sectors are coming down. Don't say I didn't tell you about this. Remember 431, I gave you a warning. The market started cooling off. We were at 167, a nothing burger. Now we're at 137. There's absolutely nothing to talk about here. It's not an issue right now. That's right, Adam. Big drop from the four. It usually goes 300, 400, 450, and then 150, something like that, just like it did this time. But notice the shorts are starting to pick up. Remember, we had 10, 27. Now we have 55. We've got something to work with here. I should have shorted yesterday Walmart, and I didn't because I was in the webinar. So it is what it is. So sentiment is a lot more neutral right now, which means bulls or bears can go higher. What about fragmentation? No cigar for us. So you got energy, utilities, basic materials, financial. That all looks great. Well, what the hell is communication services doing here? The rest of tech is down here. So, and it's actually moving higher. Okay. So if we take this out and put it here, we got industrial. That looks good, but mid caps don't belong here. So you got to take communication services and mid caps and put them down here. Then things would look a lot better. So energy, utilities, basic materials, financial, industrial, consumer staples, real estate, S&P 500, or the Dow would go higher than the S&P, and then you have all this stuff. So is it looking better? Yes. It's looking better, but it's not completely out of whack. But you got healthcare here with tech. That doesn't belong. Healthcare belongs down here, up here. I mean, home builders is not too bad. Retail and home builders being around here is not too bad. But the Dow should be up here. Communication services should be down here. Mid-cap should be down here. Is it looking better than it's looked the last few days? Yes, it's getting better. Remember a week ago, it was like a salad. It was like tech here, consumer staples next to it, Russell 2000 next to energy. It was just all over the place. It was all over the place. But right now, there's just three. If I could take three and move them in the right way, we would be a lot closer. What I have it in the TC 2000, Leonard. I show it during my VIP room. Yeah, I have it. It's there. It's all there. Pre-open, it doesn't. Remember, when the markets are closed, there's no advantage, and I can go back in time here. So, anyways. It doesn't really make any difference. But again, you want and I sent you guys yesterday, I sent you this. Here's the groupings right here. Here you have all your groupings right there. Okay. So you could see what your groupings should be right there. You should have that. It's in the public Telegram channel. That's what happened to it, Leonard. Did you get it, Leonard? Hope you got that. Okay, so fragmentation is going away. It's getting a little better. There's no major sentiment on any of the sectors. You could see that blue chips are leading by far. There's no question about that. And before we get into the stocks, let me talk about Tesla and Google a little bit, okay? Good. Glad you got it. So Tesla, let's talk a little bit about Tesla. And I talked about Tesla yesterday as well. Remember this channel I drew for you guys a while back? We huffed, we puffed, we tried to go higher, and we couldn't. And now we're breaking this level once again. If we break this level lower, I think we're going to go down because we couldn't even go up, and the high here is lower than this high. So we're almost to the point where we're going to have to draw another channel like this at one point or another if we continue going down this way. We're not there yet, but I'm not liking this. So I want to see a hard stop here, a real hard stop and a bullish trend, or a breakdown taking us down to the next level, which would put us at about 155. Do you guys remember what the downgrade target is? Can somebody post it for me? I don't remember what their target is. I'm curious what their target is on the downgrade. If you guys can post it for me, I would appreciate it. So I'm not seeing any rainbows and fairies from Tesla. Google, on the other hand, let me talk to you guys about Google. Now, look at a weekly chart of Google. That looks fantastic. And we're above the high right here. So Google actually looks pretty damn good. I like what I'm seeing on Google right now. Non-farm pay employment. Okay. Thanks for that, Cam. Good to know. Good to know. Again, they're 50-50. Sometimes they're right, sometimes they're wrong. Sometimes they'll go 10 times being right, and then they'll go 7 times being wrong. I'm talking about the ADP report. So they got more than they expected. So it'll be very interesting to see how the employment report looks. But as far as impacting stocks this morning, not seeing it impact the stocks negatively at all, just kind of drifting the same way they were before. Maybe a little bit on the QQQ. And we still have, remember folks, we still have Bowman speaking. We got PMI, we got ISM, and all these speakers. But keep your eye on tech stocks because of that downgrade in Intel. That downgrade in Intel doesn't bode well. As long as it doesn't gain contention, as long as it doesn't get contagious into other stocks, it should be okay. Man, look at that. It just got darker in the last 15 minutes. Looks like it's going to rain here now. Hopefully you guys could still see me okay. All right. Talked about Google. I told you how much I like Google. And I do like, by the way, for the record, Adam is right. I do like the communication sector. I do like the communication sector quite a bit right now. I do. But Tesla, I'd be very careful. And I think that downgrade, 125, I see a short-term target, George, of 155. I don't know about 125, but I'm not liking what I'm seeing, but I do like communication service sector. All right, I'm going to do the short side first, then I'll do the long side, and we'll go from there, okay? Let me put up a different chart with my moving averages. And folks, between 10 a.m. and between 10 a.m. today and 1 p.m., Cam is going to be in Customer Service Live. It's going to be on today, and he's going to be talking about a session demonstrating the Pro Trader dashboard scanner because we expanded it. We added 300 stocks to it that are not in the S&P. So you had 500 stocks in the Pro Trader dashboard. Now you have 800 stocks. So we've expanded it, and I like it. So and Cam's going to talk about setting it up, talking about it. That's going to be in customer service live. You can access it by going into your members area um, and hitting the red button. And here are my links for today's events. Now, let me go ahead and talk about my stocks. I'm still bearish on Nike, especially if China is going to be in the crapper. I'm still bearish in Humana, although we gained over 150 points since I called it, including 47 points yesterday. Still bearish on the stock. Starbucks, starting to get a little bearish on Starbucks. Though I'm not loving this trading action, and I'd love to see it really break down. So Starbucks, I'm not ready yet. Oh, yeah, definitely. Definitely. I regret not taking this yesterday. I really regret not taking this yesterday. Walmart, all the way up to the 50-day line. There's some downside right here. GL, nice breakdown on GL. That's a purposeful breakdown right there. That's not random. Wyndham Hotels, interesting. That's a breakdown below the 200-day moving average, folks. Pharmaceutical stock breaking down. Oh, that looks beautiful. Where was I yesterday? Posting on Telegram. That's where I was yesterday. Now, notice this one. Very choppy, but it's giving us a real breakdown. It's not just doing this. See that? That looks random. That looks purposeful right there. Z for Zorro. You know, I was a strange kid when I was young. Zorro was my favorite hero when I was young. It wasn't Superman or Spider-Man. It was Zorro, right? I was a wacky kid. I used to, when I was 5 years old, I used to dress like Zorro and play fight, Zorro. I don't know what it is about Zorro, but I love Zorro. All right. This one here, if it breaks down this level, this will be a good one. It's going to go down all the way up here, but I want to see it break the 44.80 level first. And last one, Zscaler. We've been talking about this stock a lot. Oh yeah, but it's got to cross the 200-day moving average. And I don't like how volume is slowing down here. So let's wait for it to break the 200-day and volume to pick up. Let's now talk about the long side. Pizza. It's kind of weird, right? Delivery pizza sales are good, but Starbucks sales are bad, right? Lone Ranger, Robert, now we're talking. I'd like to wait for it to hit the 8-day and then pop back up, but this looks great. Domino's looks fantastic. Yeah, I host silver away. Yeah. Um, this one really no, not Goldman Sachs. No. General Mills. What's the here? This one. General Mills, not Goldman Sachs. Wrong ticker. This one. This one. I like this one. Um, remember the stock in the trading pit? Still like it. Still like it. I always pick day trades based on swing trades. Look at that beauty. That is a beauty right there. Kroger. I like Kroger. Man, I'm giving you all the stocks these are all the stocks that I was like looking at yesterday insensibly. Looks fantastic. GoDaddy. GoDaddy is the only tech stock I think that I really like, by the way, as of right now. I like GoDaddy. Don't be surprised if you see one of these in the pit today or tomorrow. And by the way, if you're in the pit, notice I've slowed down the trades. You're welcome. If we had have taken any trades to the long side, aside from the ones that I took the last couple of days, we'd be toast right now. Disney was one of the only stocks that rallied yesterday towards the end of the day that wasn't that was not a industrial stock. Progressive looks fantastic. I spent a lot of time finding these stocks for you guys. I really do. Hard to go wrong with these stocks. Look at that. It's a nice breakout, nice volume here. Push my stocks. I must be doing something right. Do you see the halving of Bitcoin affecting some stocks? Yes, Richard, I do. Let me continue here. I still like Disney. I still like Disney. Not for a day trade, but I like it for a swing trade. Man, this stock was strong yesterday. And look at how it's doing today. This stock was strong yesterday. If I had a choice, I'd buy it again yesterday when it hit the 8-day EMA, but we were already long. HP. Mm-hmm. Look at that. Nice, 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 nice. A little choppy, but hey, it's moving. It's getting the job done. The only thing you have to realize is if you're getting into a choppy stock, you may have a little more drawdown, but that's just part of the game. You can't have gains without pains, right? Beautiful stock. Chevron, one of my favorite energy stocks right now. Remember, we have a petroleum report today, so be careful. This one looks good. And tap. Horse. Fantastic looking stock. I really love the stocks. I'm very proud that I'm allowed and I'm able to give you stocks that look so good on a daily basis. All right, now, before I let you all go on your way. Oops, there we go. Before I let you guys go, I'll be going live today at 1 p.m. and I'll be talking about my fresh highs second quarter market outlook. And I'll be talking about my big predictions for stocks, oil, bonds. I'll even talk about cryptos. And you're bound to be shocked by a few of them. I'll even give you my two top stocks for the second quarter of 2022. If you're really serious about trading and you want to make this more than a hobby, join me live. It's happening at 1 p.m. And I'll be live at noon in the VIP room later today as well. Thank you so much, everybody, and have a fantastic morning. If you have any questions, roger@rogerscott.com. If you have a customer service question, go at 10 a.m. and go to Customer Service Live, where Cam today will be showing how to use the Pro Trader dashboard with 800 stocks instead of 500 stocks. Bye, guys. I'll see you later. Take care.